everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big four markets and make a plan of attack for tomorrow's trading. Tomorrow is going to be the 27th of the month, finally wrapping up the end of June already. Kind of crazy how fast that month went by. But overall, you know, today is a breath of fresh air. We actually had some pretty good movement, and compared to last week, where you might as well have brought a pillow to the office, today should have at least woken you back up again. It was a pretty good day of opportunity if you were patient enough to wait for the good setups, and just an overall pretty solid day. I look forward to more of these, fingers crossed. Now, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up with us so that we can send you an email every single time one of these videos comes out. Along with that, in that newsletter, we talk about different stocks and different statistics and different, pretty much every market, cryptocurrencies, options, you name it, it's going to be in there at some point. So a great newsletter to get your hands on. Also at the bottom of the page, we have two different blog posts we make every morning. One, right before the live trade room opens up, we post our live trade room morning prep levels. Those are the major levels of support and resistance for that day, so make sure to grab hold of those every morning. And then in the afternoon, we go over either a live trade room example or we cover the market psychology of a specific market. So a great way to learn more and just kind of grow your knowledge of the markets every day, and that's really our goal. Now, if you haven't done so already, at the live trade room subscription and trial info, you can click on that and you can sign up for a one-day trial, see what we're all about. You can sit down with us in the live trade room, you can see my screens, you can see everything that we're doing all day, and just a great way to kind of hang out with us and see what we're all about and see if we're a good fit for you. And of course, you can ask questions and all that fun stuff inside there as well. So a really awesome resource if you haven't done that one already. Now, as always, if you do enjoy the live trade room as a subscription basis, you can sign up for a weekly or monthly subscription. And if you want to join as a full-fledged VIP member, of course, the live trade room comes with that package, so you never have to worry about spending anything ever again. Now, looking at the euro overall, we really haven't had a whole lot of progress, I guess is the best way to put it. We had a lot of movement today, but not a lot of progress. We opened up right there, and we're going to be closing down here, but overall, the move started with a new low, then a new high, then a new low, then a new high, and now they're almost back down to a new low again. So just a range that just keeps widening out over and over again. This is the type of scenario where one of two things is going to happen. The buyer's last line of defense was at 12,329. That's the last line of defense. So if the buyers cannot hold this, which it doesn't look like they're doing a very good job of, if the sellers decide to take back over and start breaking through some of this support that's in the way, we could easily rush right back down to a new low. We have monthly support at 2205 as a magnet, and possibly even a little bit lower. You can see after that, it's pretty wide open. So that kind of leads me to believe that if we had this big cyclical nature of a new high into a low, high, probably going to go down into a low, given where we are right now. The overall movement is very range-bound. We're looking to buy low, sell high, and try to stay out of the middle. But with a kind of a widening of this direction, we're allowed to basically look for kind of continuation trades. Even though we are in a little bit of a range, these ranges do tend to get wider and wider and wider. These swings from high to low are getting bigger. So that allows us to go with the market for a little while until we start hitting those extremes. And because we haven't hit that extreme yet, we're looking for this as a selling opportunity to drive the market back down. Again, buyer's last line of defense was right there at 12,329. We have broken through that, and now we're forming a little bit of a wedge. So I would like to see that area as an area of resistance to sell down and get that final objective down there. Now that's where you have to kind of switch gears a little bit. Once we get down to those lows, that's when we start thinking, okay, well, you know, we failed a new high there, failed a new low there, failed, probably going to fail down here as well, and that's what we would be looking for down there once we get there, and then looking to buy back up towards the towards at least the middle or so, around that weekly support at 12,435. Now, if we do start cycling back higher in the overnight session, if we get that objective to the downside and start popping our way back up, 12,484, 12,539, and 12,613 are areas of resistance on the way up. Maybe be able to find some short-term bounces there, but more likely, if we're going to be buying down here, those are some nice profit-taking areas as well, until we get up to the extremes, and then, you guessed it, we're going to start looking to sell up there. So pretty much a game plan for the next week, it feels like, on the euro with how range-bound this is, but at the moment, looking for selling down to that objective. Over on gold, gold had a little bit of a flash crash earlier this morning. Right after 4 o'clock, we had a big dive lower. Now, looking at this dive, it opened up at 1254.6 and pushed all the way down to 36.5, roughly 180 ticks. Now, with that kind of drive lower, one of two things is going to happen. Either the market is going to continue that breakout move and just keep plowing lower and lower and lower and lower, or we're going to get stuck inside of that candle for a little while. Could just be a quick little flash crash and the market takes it all right back up, or we could just kind of, falter around inside of there for a little while, which is what it looks like the market wants to do. And if that is the case, there are several levels that really kind of come into context here. The high of that drop, which is at 1254.6, it's going to be a major level of support and resistance for the rest of the week. The same goes with the overall low. The low that was made on that big drop lower, 1236.5, a major level of support for the rest of the week. We're talking weekly support and resistance on a single 5-minute candle. But that's the type of context that you get when the market decides to shed over a full percent in 5 minutes. So it's definitely levels that we have to keep our eyes on. In the interim, though, we do have a slight bullish flag. A bearish flag rather. Nice little bull channel working its way up. And it does kind of look like there's a little bit of a midline inside there as well. So if we are going to create this as a flag, I definitely kind of want to keep this in context of the fact that, well, this might just be a really big bear drop lower, bear flag, and then an attempted breakdown. What I'm expecting on that secondary breakdown, though, is for them to stall out on that 36.5 and have a little bit of trouble. Overall, definitely still bearish. It's hard not to be, but I would love to sell up here at 54.6, right here at 46.7, or starting to think about maybe even buying down at 36.5, assuming that any breakout below that big of a candle is going to be a failure the first time around. Either way, though, we're kind of smack in the middle, so it's going to be tough to do anything but sit on hands until we get a little bit more movement in a direction that makes sense. We are cycling off of that 46.7. I would like a retest of that, but that may be all we get is that one test and then a near test. That is the case. Still looking to sell right there and looking for it to push down to that 36.5 as a final objective, and then maybe switching over to the buy side for a little bit, at least for a little bit of a bounce down there off of that low. On crude oil, another one of those markets that was a little bit cyclical. We had a nice bull rally working its way higher most of the morning. They made a big failure at the highs and dropped all the way down to a new low before finding a bottom and reversing back up to almost all the way to a new high again. Forming a little bit of a two-push wedge so far. A little bit more information required before we get that three-push wedge top. And that third push, if we can get it to take long enough, right? That's something that we kind of talk about a lot, is that perfect storm, that kill zone. If we can get everything to line up in the right place at the right time, we have horizontal resistance right there. We have the top of a three-push wedge right there, and notice where they start kind of intersecting with one another. And if we add a little bit more confluence in this, right now we don't really have a low to play with, but if we draw one up, depending on where this lands, if we do start getting some bullishness, we may have everything kind of stacking together all in the same place around that 43.60. So it depends on how long it takes, and of course this bottom isn't solidified yet. But there's a lot of stuff to lead me to believe that we're going to start turning into a range, and selling above at the highs is going to make a lot more sense. Right now, though, we have a very strong bullish reaction off of the lows, so I would like to buy a pullback to get up towards those highs. So I'm looking to buy a pullback down to 43.09, 42.99, 42.83, 42.73, all the way down, finding those levels of support. The hot one is going to be 43.09, though, looking for that bounce back up to get that hot spot kill zone instead of possible resistance. So definitely in the short term, looking for the buy side, but in the long term, could easily switch gears and go right back to the sell side once we start hitting those highs. And then finally, the S&P, for the most part, nice bullish rally for a good part of the day. After the stock exchange opened up, though, going into 10:30, 11 o'clock, we shed quite a bit of that rally, well over 50%, going into 65% or so of a pullback from the highs. Big drop lower, and now we're holding the opposing side of things where we once had support inside of here. Now we're starting to show that switch gears into resistance, and we're holding it pretty darn well. So that overall resistance coming into play, the last chance for the buyers to really hold is going to be at 24.3375. We have weekly support at 33.5, and we do also have weekly support down at 32, but that's it. This last little spot right here, that's the last line of defense before they give up the ghost and we start pushing back down to new lows again. And the buyers are going to have a lot of work cut out for them. That is a very aggressive bear rally. Basically took back 50% of the pull of the move higher. that took all day, took it back in 15 minutes, 20 minutes. So a big drop down from what we've seen so far on that rally higher, and that shows that the bears may have a little bit more control here. If we zoom really far out to the bigger picture, we can see that this is really just kind of the same range that we've been stuck in for a while. We're having a hard time here getting out of our own way for the most part, but you know, the buyers gave it a shot, and they have not many chances left to keep it going. Otherwise, the sellers could easily take back over and shove it right back down to a low. In areas of support, 33.75 is the last one that we have for the buyers. In terms of resistance, 40.75, 42.25, and then 44.5 are the areas of resistance that we can use to our advantage for possible bouncing, if not some selling options to push the market back down. So that's going to do it for the outlook. In terms of the news tomorrow, we actually have a good amount of news tomorrow. My fingers are definitely crossed for another day like today where we can get some things moving around a little bit. Tomorrow morning at 4 o'clock Eastern, we have the ECB President Draghi speaking. You don't want to be playing around in the markets when Draghi's on the microphone, that's for sure. If you've never seen that happen before, it could be a good learning experience, but I know I'm going to be sitting on hands. Actually, I'm going to be sleeping, so I guess I'm going to be laying on hands at that point in time. At 6 o'clock in the morning tomorrow, out of the UK, we have the Bank of England Governor Carney speaking. At 10 o'clock for the U.S. session, we have the CB Consumers Confidence forecasted at 116 even, previous 117.9. And then going into 1300 in the afternoon, now, if Draghi alone wasn't bad enough, we have Federal Chairwoman Yellen speaking, coming at 1300. So we got two really big speaker names tomorrow, and that's going to be something that we really need to keep our eyes on and be very careful around, because they can throw the markets around. So that's where it always comes in, and that's why we always say it. Make a plan, trade the plan, follow those rules, and you'll be okay. Until next time, we'll see y'all then.